So today on our Unbounded Capital Limited Partner webinar series, we have the founder of one of our portfolio companies, a company we've invested in multiple times, both out of our first fund and invested in our new second fund, James Belding, the founder of Tokenized. And James today will be demoing the Tokenized platform, and myself and my other partners on our investment committee who are on the call today, both Dave and Mike Hennessy, will also potentially ask James some questions. But for anyone in the audience that has any questions for James, you can feel free to either write that directly in the chat for all to see, DM myself, or you can kind of raise your hand and then you'll be able to speak and ask your question to James directly. So without further ado, I'll hand the floor over to James. Thanks for joining us today, James.
Thanks, Zach. So to give you guys some context, the Tokenized, what we're trying to do is really trying to usher in a digital transformation of contracts. I think that's the best way to describe the core value proposition and the innovation that we're bringing to the table. So obviously tokenized tokens, that's a hot topic in the space. And we use digital ledger technology underneath it all, which is Bitcoin SVU, which we see as the only one that can really deliver on the promise. But the core idea here is really taking existing financial infrastructure and the digitization that happened over the last 30 years and pushing it forward by a significant margin. And we believe by doing that, including the contractual elements, all of the contracts, particularly in the private markets, is a huge step forward, and it's where everything's going. And it yields incredible features and automation and novel insights and a much, much better value proposition. So it's a real step change in sort of financial infrastructure and fintech. So that's at the heart of it. Everything we do, we store in terms of all the core records. So payments being sent, atomic swaps, which is sort of like a new term of art for delivery versus payment. So the idea of digital assets trading for other digital assets in an atomic manner, so that they happen at the exact same time, or it fails completely. So there's no credit risk or liquidity risk involved. And other types of contractual elements, like so distributions, dividend payments, interest payments, or coupon payments, contracts being amended, contracts being subject to votes, so like resolutions being proposed and resolutions being voted on and controlled by the smart contract, with the voting rights being enforced. So the idea of basically a shareholder who has super voting rights or is not able to vote on some resolutions, that will be enforced by the smart contract. So it's a real step change in sort of the automation that's capable across the entire life cycle of these contracts. And we do it for, as I said before, the private markets is really our focus, but it's a universal approach. So we can just as easily do public securities like Tesla shares and add value there as we can to carbon credits, loyalty points, coupons, all these sort of legal or financial instruments that play a role in giving rights and duties to customers or holders and the like. So, and I think the key insight that we sort of have come to realize, and I think is at the heart of what we're doing here, is that all of these instruments and the contracts themselves, there's a pattern that exists, that sort of exists between all of them. And it really comes down to people agreeing to offer some value, and perhaps in the future, or perhaps subject to some conditions. And then all of the natural things that happen over time as the things maybe don't go as well, or they go really well. How do you manage humans dealing with that? Who gets what happens if things go wrong? How do you manage change? All those kind of elements are sort of baked into it. And so that's I hope the best way to describe what we're doing here. And I think that really hopefully pushes people's understanding further beyond the token mania and a lot of the nonsense that we've seen in DLT that's kind of unfairly marked the space in our view. So I'll just quickly start taking you through our app here, and hopefully that will kind of hammer home some of my points. So we've, as a starting point, this is our platform is like a cloud hosted API that can also be hosted on premises. So some financial institutions and enterprises need on premises for compliance reasons or business reasons. So we have a hybrid modular platform, and the front end that you're looking at here, the desktop app, is supported by all the operating systems. It's also supported by any browser. And we've also got a companion mobile app that sits on the App Store or the Play Store. And so those work together. The entire front end is open source, like MIT open source, and available for anyone to go through and to use in any manner they want. They can white label it. They can also use our JavaScript SDK to take out core features and functions and embed it in their own workflows and user experiences. And at the heart of what that is when I say a digital transformation of contracts, it's really two key components with some sub features in between it. So you've got a digital wallet, as we all commonly understand it. So that's really keys, like private and public keys that manage the holding of digital assets on chain, and also are used to authorize certain actions like transferring digital assets, signing a contract, effecting changes to the contract through amendments, proposing resolutions. All those things come from the keys, and that's a self-custodial model. So when we look here at all these different companies here, these are basically workspaces that all have their own wallet. And when it comes to organizations, it's really a hybrid of a number of wallets put together to form an organization wallet. So multiple users that are acting as responsible managers of the entity will have their own wallet that interacts with each other in a sort of a permissioned, controlled way. So I'll just skip through these and kind of show you some more here. So these are obviously not real companies, customers. These are all demo things just to kind of show you, even that all these tokens are on our demo platform. This is not real live, but it is on mainnet. So you got different ideas here. So one way of looking at this or to understand the workflows here is creating a new one. So you get a paymail handle to go with it. And so that's like the identifier, like the equivalent of a bank account number. And then we've got, so built into this is we've got all of our payment workflows. So the idea is that this is all a fully automated experience. So kind of equivalent to like Slack or Gmail, where a user can just download our app, and it can be for any purpose. It could be an enterprise with financial instruments in mind, or it can be just an individual, and they can navigate through and automatically set everything up. And we've got different plans for different use cases and different needs. So just to show you here, this is all also linked to Stripe. So it's all like we could basically service every country, and everything's paid for automatically through credit cards. I'll just, as an example, set this up. So once you set, I'll go back here. So this one, what I've selected here is business, and that allows for 1 to 3 administrators. And so this is the security model that's appropriate for significant holdings and significant contracts. So you can have 3 administrators and have different signing arrangements to control those digital assets. And that control, again, is self-custodial, but it means that you're interacting with a distributed ledger, not necessarily us, even though we're sort of a middleman in terms of our platform. But that means the security is improved over traditional financial infrastructure. And it actually does come without any of the negatives that many people associate with it. So in the case of any of these users losing their keys, there's still ways to essentially get their digital assets and contracts back. And there's an on-chain sort of audit trail to capture that process. So I think that's really important. And so just going through here, you can see that you can select the number of administrators. You've got the limit as the account that you selected or the plan that you selected. Here we've got an arrangement where there's 3 administrators and 2 signatures are required from any one of them to authorize important actions. So as a default, just if you want to send tokens or send digital assets, you need 2 people to sign off on it. The same would apply to contracts and any kind of important like account level action. This is a really, really important point, and it also kind of unlocks a future where we see the idea of having authorized representatives or authorized signatories for entities being declared in a public manner with a key that can be attributed to them. And you can do that in a private or a public way, where if it's private, the actual person who's involved isn't necessarily public, but anyone that wants to contract with that entity, they know if they're getting a contract signed by that person or they're engaging with them, they can sort of prove in a very robust way that they are actually authorized to make that call for the company or make that signature on a contract. And so again, that's never been possible before today. Most contracts, I would suggest the way that people actually identify each other is they just get an email and they assume by the email that they are actually who they say they are and they are authorized and that contract will have effect. This is kind of tightens things up a lot. And there's some important implications for that, particularly around fraud and reducing the possibilities of sort of multiple sets of books and the like. And so once you've got that, you can just go through and select or invite all the admins. So and then so you do the final review, and then you proceed to checkout, and basically the thing gets created, the invitations get sent out by email and also within the app, and then they can go and accept it. And then they basically formed a workspace with the right control and permissions in place, and they can start trading. So it's very quick. I'm actually not going to finalize this because I don't want to pollute this for their demos, but this is all working. And there's just little tool tips and stuff to explain everything. So again, we're trying to make this really user-friendly, explain any concept that's unfamiliar, trying to use terms that are familiar to everyone else. So this is not like a blockchain product. This is a product that leverages blockchain. So once, let's say this is an example, Tokenized Pty Ltd. This is our Australian entity. We've got a little Australian flag there to signify it. Once you go in here, you can see there's the details of the organization. So your handle, the name, picture, all these kind of details. You can go in, and these are optional, but you can go in and edit them at any time. And these will be sort of public to other entities and people on the platform, and public to anyone that connects to the API. The administration comes down to the control of the workspace. So you got two administrators, one approval required in this case, and you can see who they are. And then billing, you can go through and manage all of the bills and invoices over time and change your card and things like that. So if I go back here, just while we're in this settings, I can just share a little more. So we go to user settings. So I guess the core concept is you as a user, you're logging in and you're participating in different workspaces with different roles and permissions, but you're still a unique user. And so the user has its own set of keys and its own wallet and interacts with all those other ones, as I kind of mentioned before. And then you got all the security elements to go with it. So I really want to stress the security architecture. We spent a lot of time on it. It was actually very challenging to even conceive of in the first place. And I know a lot of big companies in the space are working on similar things, but I don't think have actually got the formula right. And the challenge really comes down to not just creating a basic set of keys. The challenge comes down to creating keys or wallets that are sophisticated enough to manage all the common needs that businesses have, from the very big to the very small, in a way that can also secure billions of dollars if need be, and can do so in a way where it's private. So when you're affecting transactions or transfers on chain, or you're interacting with contracts, you don't want those details to be revealed to the world, right? So you want the public accountability, you want the audit trail, you want all those kind of core features that are really valuable, but you don't want to reveal sensitive business details or transaction details. So to blend that with the ability to change administrators over time, and so someone leaves the company and you get someone new coming in to swap the keys out, those things are incredibly complicated when you're on blockchain, and requires a lot of keys to mask values and to randomize different quantities as they're sent to different people. So you can't tell by inspecting these transactions who's actually getting what. And then especially when they combine it with the mobile app, which is sort of like a protocol level multi-factor approach. So the desktop app and the platform never sees the user's keys. The mobile wallet is where, for each user, is where the keys are originally generated and managed, and where the actual signatures take place. So when you authorize, or I'll show this in a second, but when you send a transfer, it will say, okay, prove this on your phone. And then you go to your phone, you do a biometric face scan or fingerprint to open the phone, or you put a pin in, and then you approve it, and a signature of the transaction. So the core protocol level elements are handled on the phone, which is fundamentally a better security architecture. And so we're working with that in mind. And multi-sig, if you've got 3 or 4 users that all have their phones, all have the key stored there, never shared with anyone else, it really steps things up in terms of robustness without actually giving any negatives compared to the traditional financial infrastructure in terms of flexibility and if issues occur. And so all the features to relink a mobile app and account recovery phrases like backup codes and all that type of stuff, all linking your phone numbers are all working. And you can add new workspaces. So once you're actually in a workspace, I'll just take you to tour the key features here. So up here, you've got the name of the workspace and the pay mail. So you can always copy that and send it to others if you want to interact with them. You've also got the ability to send instruments. So if you click on that, you can select something that you're holding in your wallet and be able to send that. So I'll just do a quick demo here. We'll send this to the. Okay, so this is now sent a message. I got a notification on my phone. And then the key details, you can't see this, but on my phone, you can see the key details. Like, do you want to approve this transfer? It's associated with this account, and there's a confirmation code, so you can, it's not being spoofed by someone else. And there you go, it's sent. And so it takes under the hood, we think based on sort of physics constraints that it's going to take, and it does, this is how it performs today as well, is 2 seconds globally for any transaction value. So even if it's $1 billion, it's not going to make the difference compared to a small value. So it's near real time, and that's for all actions. So contracts, sending payments, atomic swaps, the like. If you click on here, this will actually take, sorry, yeah.
Just say, James, how does that compare to other ways of doing payments today? Like things that people are more familiar with in terms of what settlement time is and how fast it is?
So, I mean, it's pretty much as good as any other system, depending on what system you're talking about. So like if you're talking like a Stripe or a payment, point of sale, those kind of things, it's about 2 seconds as well. And it's really just latency, like getting a message across the world or to servers where they need to be in back and having a little bit of wiggle room there. This, if you're looking at like real-time gross settlement systems or really high performance, like stock exchange type stuff, the actual in the stock exchange type stuff, you're talking like really, really fast stuff. But in terms of the actual user experience and the full workflow, including the settlement and of the trade and things like that, when you consider all the elements of it, again, this is just as good, if not better. So usually a trade is not actually settled right then. A trade is affected and then it's settled afterwards. So the post-trade components. So this is on par with the best systems, if not better, when you consider the average. If you're talking like real-time gross settlement systems, which is sort of like the core central banking infrastructure of a nation. Those are super performant. They're kind of like stock exchange, like order book exchange engines. And those are super performant as well. But again, if you're transacting across the world, so if you're in a different country, you sort of end up with effectively a user experience where it's about the same 2 seconds. So where a user clicks send, it's gone and it communicates with the blockchain and whatnot, and then back. That 2 second sort of user experience is basically sort of universal. There's very few payment systems that are significantly different without kind of exposing the user to additional risk and additional failures and stuff like that. So that might have been a bit technical, but basically this is an improvement in most cases, or it's on par. Sorry, so you have to click on here. This is the actual action on chain, and there's subsequent actions sometimes as well that will be listed here. But if you click on here, this will take you to what's on chain, which is a block explorer. And you've actually got like a decoded tokenized protocol action there that you can explore. And so you can see all the technical underpinnings, and they're labeled correctly and explained so that you can have comfort that this thing actually did what it said it did. But this is also important for developers using our platform and other financial institutions and things like that, and having a second source of truth to be able to establish what happened. The fees here are all on BSV. So this is kind of what we think is a really important part of the future, is rather than subscriptions and membership networks and more complicated structures, we have a core clearing and settlement network, which is the blockchain run by miners with the unique incentives and business model that they have, and enormous economies of scale that are coming. So very, very performant, really good tech, but also the business itself, how the miners work together and how ruthless and competitive it is, allows for huge transaction volumes at really, really, really low fees, and a unique value proposition in terms of the public ledger, the immutability, the timestamping features that sort of weren't possible before. But underneath all these actions that we see, so sending instruments, in this case, US dollars, $1, you pay a little tiny fraction of BSV. And that's kind of how the whole thing works. And we've actually even have a business model where smart contracts themselves, so like for the US dollar, Federal Reserve, they can tack their own little tiny fees as well. So there's a business model that incentivizes everyone that needs to be a part of the system. And this can be hidden from the user as well. So we have this here because a lot of our clients want that kind of granularity and details, but you can build entire businesses on top of this, like payment systems and fintechs that can hide that from the customer and just treat that like IaaS costs, like infrastructure costs. and it is pretty trivial, and build it into a different kind of payment model. So Handcash does that as an example. So sending instruments, that's obviously one instrument trading. This is like an atomic swap. So you've got, in this case, with offered to Vanguard. So all of our language and labeling is really, really expressive and precise. So if you've been the one to offer this trade, this will be offered to. And the reverse, if you're being if you're being offered it, you didn't initiate it, then the language will change, and that reflects throughout the history as well. So there's a real like high level precision about what's happened, who did what and when. In this case, US dollars to pound sterling, exchange rates. We got some like little extra features here just for insights and the fees, and then you can see the subsequent steps. So one big breakthrough we had maybe about 4 months ago, and this is part of our platform, and we'll launch with it, is the ability to do two-step trades. So an offer that is prepared and sent to someone else, if they're happy with it, they can sign and execute it right away. So prior to that, we had a three-step trade. And there's a lot of complexity in getting it to a two-step where it still satisfies the needs of real enterprises and things like that, particularly around privacy. So there's sort of like angles for gaming and exposing, like if you don't do it really carefully and you don't use the innovation that we had, you end up being able to ping wallets and find out what their holdings are, expose what their holdings are. So there's a lot of like details behind the scenes to make this work really well, but we have made it work well, and we're very happy with the results. So that's double ship. And that means, again, so you send an offer. I'll show you a quick workflow here, actually. So we'll say, so we'll make the offer expiry 2 hours. And so this can sort of be anything. We can even go into seconds and things like that if we need to be. We'll say, you see that changes. So the discount, we got a market rate from an API, and then we just apply that so the user knows what they're doing. So you could add a memo if you want. So once we're happy with those details, you can see all this in here. So it's going on my phone now, approved trade offer. So trade offer sent, waiting response. Now the Handcash, you can see there's a little notification down here. So there's something to do. Your action items, ready to execute. I hope I didn't send this to a multi-sig. I think we're okay. Give me a second. There you go. Trade accepted. That's on the blockchain. And click that. I couldn't share my screen, won't be able to see it, but that's on. So that's a really big deal. And I think one of the most important elements of this is we can do more than just two instruments and two counterparties, which is really, really important for like banking, core banking stuff. So when you typically hold a bank account, like a demand deposit account, and you send to someone else, effectively the banks are sending to each other like a reserve, like a central bank digital currency, for, to use a common term, it's not really a thing yet, but it basically is the same thing. And then the user has a demand deposit. So they're essentially redeeming with the bank the demand deposit and then sending that money in the same action. And on the other side, the customer with their bank is now getting an increase in their demand deposit account by the exact amount. So there's multiple instruments really at play here with different parties involved, two banks and two users. You can actually blend all of that into a single atomic swap using our platform. So the central bank digital currency can be at the core between the two banks. The demand deposits can be what the users are interacting with, and then you can mask all that so that the underpinnings are as effective and as accountable, and all the benefits that I've kind of described to this before, but the user only sees just like, I'm sending Australian dollars to this person at this amount. So that offers, you know, a much better way of doing things, a much cleaner way of doing things, and kind of reduces risk and essentially uses one single source of truth for all those processes. And you can extend that further. So you can use it for various like complex contracts where multiple instruments are involved, multiple counterparties, options can be a part of it. You can reduce, you can just have very complex transactions anyway, and it still is subject to the same, either all of this is affected and everyone gets their instruments at the same time, or it doesn't happen at all within 2 seconds. So there's a lot of interesting things that come of this, and this is sort of core to everything in the financial industry. You can do basically everything with this. Another important thing too is if you think about the payment systems, so point of sale, like pretty much today, everyone has to go and get out their phone number or their loyalty card, or actually if they got coupons, they want to like hand it over, they have to go into their digital coupon app, or they got a physical coupon. You can now start to blend into a single payment for groceries or whatever. The loyalty points automatically attributed to or given to the user's wallet in direct proportion to what they're owed. The coupons can be automatically recognized and applied. So you can reduce checkout times, but more importantly, you can improve the customer experience significantly. So that's another thing that sort of just applies generally to every kind of payment system. And again, payment systems can be built on top of this. So Visa could work with us to do credit card payments using our platform, using instruments, and it can interact with point of sale, existing terms and cards and all that kind of thing. So that's
yeah. So James, for like the investors on the call that work in the financial industry, of which I know that there are several here, who would you say are like the target your target customers right now for Tokenized, and who kind of Tokenized can provide the most value to?
So we're focused. So initially we're focused on early adopters, people that hold BSV. So this is just like a very short term, make sure to solve that problem. So right now, if you want to hold BSV, there's no usable wallet really in our view that's safe, secure, and user friendly and is going to exist. So that's one. The second is issuers that want to do like they're private market in nature or private in nature. So funds, like private companies, startups, things like that. Those are the kind of companies you want to work with next, where you think we can offer significant value. And then on the heels of that, our core infrastructure is actually ready for that, but we're then want to start to build momentum towards bigger institutions, banks, central banks eventually, government agencies, debt markets, so bonds, all that type of stuff. We have all these core features that I've described support all those. So those are the kind of customers, big institutions, enterprises, startups. We can add value to them all. And then even as a subset of that is fintechs. So fintechs that are doing real estate, marketplaces, anything, cap table kind of management stuff, we can embed ourselves underneath it and provide significant value to them and their customers. So those are kind of the core sort of target markets that we're able to service. And it sounds like it's a broad kind of approach, but our company is very much about the core building blocks. So this is like an infrastructure play that allows for all those things to be done very easily. So it's sort of it lends itself well to kind of servicing any kind of financial need or use case.
Okay. Definitely have some more questions, but want to make some space for other questions that folks on my team or people today might have. So if you have a question, just feel free to kind of raise your hand, drop something in the chat box, or DM myself. Okay.
Hey James, I got a question. It's Mike Hennessy here.
Hey Mike.
Without mentioning customers, I know you've been talking to a few folks like in the municipal bond space or bondholders specifically. Can you just talk about how that might work using Tokenized and how that compares to what they're currently doing?
Yeah, sure. So every market's a little different. So European bond market's a little different than the Americans, but American bond market, which is I think what you're referring to. So what they're doing today, it's very paper-based, very slow, antiquated. There's many steps. There's an underwriter and all of those steps as well. And there's bonds just typically all lumped together. So many municipalities and stuff throw their bonds in one big raise. So there's no granularity at all, and it can extend the timeframes for raising money and things like that. It basically just email, spreadsheets, traditional bank accounts, that type of stuff. There are some solutions that do various different things, but not in a cohesive way. So you're sort of just maybe taking out one workflow process there and simplifying it or digitizing it. One of the companies that we're talking to, they have created sort of an end-to-end workflow to allow for like the origination of these bonds, incorporating lawyers and then incorporating the actual issuance, like so the primary market component, and they're also facilitating a secondary market. So that's something that in the American bond market or muni bond market, there's not a lot of secondary trading that takes place, and It might be a cultural element, but I think the most important reason why is the infrastructure is not there, the digitization is not there. So it's just very expensive, like a lot of emailing lawyers, and just takes a long time. So there's a lot of friction there. It's not usually worth it. So trying to remove all that friction and make it much more effective. One of the ones that I know are using likes of like Hyperledger, that kind of thing. I think they have a lot of problems with it. It's not really doing what they say it would do. But I think the key thing that we can offer here is actually the contract itself being digitized. So in the way they're doing it is the contract's not digitized. They have some features that are digitized that they pull out of the contract effectively and enter into the platform manually. And then downstream, those features or those data points are used to kind of like affect transfers and assign rights and things like that. So where our contract is actually digitized, where the software can make sense of it, and there's automation around rights and obligations. So this actually is where I think a majority of the value can be captured that hasn't really been done before. So it's very easy to just get a PDF document and drop it into a cloud app or a web app, and then have that available for users to open and read through. But you can't really get any insights out of it. You can't actually affect transfers or amendments or check to see when you're actually due and things like that. It requires a lot of manual handling of it. Whereas ours, once you've entered the contract details in the beginning, so when you actually draft and execute the contract to begin with, all those details are now recognizable by software, not only within our platform, but interoperably with other platforms. So everyone can, holders alike and other banks like that who have permission to, they can see where their holdings are, when they're owed when, if payments have been late, and they can calculate everything specifically. And therefore you can sort of strip out tremendous costs and tremendous time. And most importantly, you can just have like decision makers know what their risks are and what their positions are instantly, which is not really possible today. It usually requires a bunch of emails and a bunch of like time consuming digging through documents and sort of figuring out where positions are and what the rights are. So I think that's a really key thing that can't be overstated enough in terms of where all the value comes from once you get the contract digitized properly.
Cool. Thank you, Mike. Where did Sloan go?
I'm right here.
Oh, hello. Okay.
How are y'all doing?
I'll leave it to you.
Yeah, I was just kind of curious how y'all dealt with like kind of the last mile of the on-ramp and the off-ramps to systems, just globally, or if this is just US based, or just curious.
Sure. Yeah. So you're talking about like the payment side of things, like US dollars. How do you get it onto the platform and then withdraw essentially to your other bank account? Is that what you mean?
Yeah. So like if you're embedding services for different exchanges or different financial platforms, how would that last mile off-ramping capital from your platform or from other services that are connected to y'all look like?
Sure. Yeah. So for US dollars or the payment instruments like cash, we have infrastructure to connect to core banking systems. So we can actually have effectively like banks be issuers of US dollar based instruments on chain that can then interact with all these other contracts in the ecosystem. So that sort of work is done. We don't have a bank that's actually doing that yet, but we are working with a few in the background at the various stages to have that come online soon. We think a lot of the value prop is not dependent on that yet. So we can offer a lot of value to lots of other instruments in the private markets, shares, bonds, etc. without that. But we do agree that that's where it really blooms, is when you get the payment elements built into the functions and the workflows, that it all becomes really, really compelling. So we have the idea is that we don't want to be a payment service provider or a bank or a regulated institution. We want to be a tech platform only and allow for banks to connect with effectively their customers on this platform in this unique way. And same with the other issuers and all that. So we're really connecting and bringing all these people together. And then I think what's unique about us is that we allow for those regulated instruments to have regulated features at the protocol contract level. So this is where this term here, oracles, comes in. So you can essentially, as when you're creating a smart contract, you can declare oracles, identity oracles, and authority oracles to perform certain functions. In the case of identity oracle, it means ensuring that KYC, KYB verification processes have been done by a regulated entity in order to be able to transfer instruments to it. So you're essentially linking on-chain public keys with those identities. And then authority oracles are about freezing, confiscating, and unfreezing tokens on chain. So if an authority oracle has the rights, they're declared on here, they can then issue from their public key on-chain an action to freeze a token for compliance reasons, for the reason if the customer's lost their keys, or if there's like a court order or something like that. And you can actually have as many identity oracles and authority oracles as you'd like. So this allows for a replication of essentially the banking system or the securities market system to work on chain with all of the core records that sort of make that happen on chain, and with contracts, smart contracts being at the heart of it all. So I hope that answered your question. As a result for like the UX, like we have tested it with APIs for banking infrastructure that has sort of like demos, and in the user experience, you can just withdraw and deposit from your traditional bank account, and it takes whatever the banking system's like. In the case of the API we use, it was instantaneous. And then once you got your digital US dollars, let's say, on the platform, you can then start doing atomic swaps and interacting with it. So it's a very slick experience. We just need to get the banking partnership in place.
Got you. So you just made yourself interoperable enough to try to facilitate any type of relationship with banks or other platforms. So if you wanted to, you could deal with some like market maker aggregator, or some other bank using like some fixed protocol or something to be able to onboard them, is like what you're saying?
Yeah, exactly. Yeah.
Okay.
I think it's also central to our strategy is that we don't want to compete with these customers. We don't want to be a bank or a regulated entity. We want to be neutral tech so that we can service everyone, which I think gives us the biggest market potential. But it also kind of reduces the friction in terms of it wanting to adopt us and use us and things like that. So if anyone has a question, just jump in, but I'll just keep talking a little more here. So I think a key concept here, again, that just distinguishes us from any other solution that's trying to do what we're doing, is really a deep appreciation for the legal concepts that are underpinning all of this. And so we have like the ability to create instruments within a smart contract that have an instrument type. So this kind of falls on with traditional financial messaging protocols. Is this a bond? Is this a share? What kind of bond is it? Is it preferred shares? Are there some voting rights? And then within that instrument type, you have features or codified terms, if you will, that are configurable, that allow for certain rights and obligations and like. And then you got the authorized quantity. So even the sequence that a company goes through in order to authorize shares, let's say, there's an authorization sequence before there's an issuance sequence, and there's important legal reasons for that and business control reasons for that. And so our protocol follows that precisely, and it does it in an on-chain manner, and it does it in a way that's flexible so that the right people can sign and still delegate subsequent tasks to someone else just to make sure the business operates effectively. And I think that's very unique. No other token solution that I'm aware of really has this all dialed. I think another key thing that we have is the full contractual or full contract, all the terms and conditions. So this is like almost like a Google Docs in itself. There's a huge amount of work that's gone into this to create like a proper contract drafting tool with spell check and the ability to embed definitions and variables and the like. And it can basically do anything Word can do with respect to what you need from a contract, but it does it in a way that's structured and allows for a better contracting life cycle. So you can get better insights, you can manage risks, you can search through all your contracts and figure out key details, like when everything expires, what's something that you have to worry about this month, things like that become much more at your fingertips. Also the amendment procedures. So this is depending on the type of contract. So if you want to start pushing the envelope with certain types of innovations, like say Reg D or crowdfunding type companies or Reg A plus, things like that, where you start to have a lot more shareholders on your books that may or may not be involved. You want to manage the risks of how, what if they don't vote or they don't sign or they're not contactable, things like that. You can kind of start to embed more automated flows for managing bigger groups of people. And you can set up rules that are managed with a smart contract to say, we can change any of these terms if we get 60% of the shareholders to vote in favor with different voting rules around that. So these kind of things are really important. And we think there's some real big opportunities that come because of it. And another key part too, which separates us, is we're sort of leading the pack when it comes to actually making these codified terms useful. So what that means is our protocol, which is open source and documented very well, has legal elements to it. So it acts as sort of a master agreement, similar to how ISDA master agreement works, where you can see on a per jurisdiction or per governing law basis what the codified term, like a transferability, actually means legally in precise legal language that's appropriate for the jurisdiction. And therefore, lawyers, judges, business executives can assess the risks accurately and adjudicate or settle dispute resolution. So I think that's a really key point. And so no one else has really tried to do that. Other examples like Digital Asset and DAML, they've got a bunch of tech and a bunch of stuff, and they just push it onto the customer to figure out the legalities. And we think that sort of undermines the whole value proposition of a standard in this case, where you're bringing the contractual elements into it. It needs to be standardized in a way where everyone understands what the details are and what the effect legally is, without having to do on a case-by-case, user-by-user basis, because then you're sort of back to square one. We think it's really, really important.
Okay, well, James, thanks for your time today. And thank you everyone for joining the webinar. Have a great rest of your day.
Thanks, Zach. Appreciate your time, everyone.